Hey, so team. I mean, group of unaffiliated enthusiasts who in no way do I coordinate anything with. Team is a proprietary term. Oh, it's live stream time. Now is the hour. What's up, Jake? Johnny, what's up, man? Happy Friday. Where's the t-shirt with like the finger people who say what's up? I remember there was this one kid in my middle school who really liked that. I don't He really liked it. He liked to say that he was punk. Maybe he was. I don't know that I actually had the faculties to evaluate that as like a 13-year-old. So what's up, rehards? Oh, it was a time, was it not, folks? Jaw feel. Rehards. It was a weird week. These folks, they're tricky there, man. They're tricky. Look, and the thing is too, like, I was talking to Richard about this earlier, not Rehards, but Richard. And yeah, it's important to remember that like we're not who they're thinking about. Like whoever is orchestrating this stuff, like they're not doing this to trick us, I think. I mean, I think like they're happy if they do. To a certain extent, I think the volatility cycles will do that anyway. Like, I don't think in terms of thinking about, what's going on with retail, are they concerned about like, oh no, they've cracked the code, like they know the ETF, like the ETF jig is up. Like if they did think that, then they would have already thought that a year ago, which is probably true. So like the whole GMEU thing, very strong chance, right? I mean, we've been talking about this for a while. Like they announced they were going to do that last summer. So I have to assume that like this is something that's been in the works for a while. So it's important to remember that like we can stick our noses in here and we can stick our fingers in here and we can try to make stuff happen, and a lot of the times we can make some stuff, like some outside stuff happens as far as like as concerns our personal lives or the lives of our friends and family and stuff like that. But like if you think you're gonna like if something happens that's unexpected, I think it's important to keep it in perspective that like it's gonna be, things will happen that are unexpected because there's a different multi-layer game that's just happening way above our heads that like institutions really care about, and I don't think they're really worried about scraping pennies off of us that much. I think as far as that strategy goes, by the numbers, they pretty much have that figured out already. It's gonna work for them one way or another. For our trading, the only difference is which part of the normal distribution, like they've got all the math figured out, they've got the probabilities, they've got the statistics, and it's a question of by adopting this strategy versus this strategy, do we go in, which statistical category do we go in? That's really the difference, right? But in terms of like where the percentages will line up, I don't think that. I don't think they're too worried about that. That's my take on it, I suppose, for right now. What's up, Timer? Thanks, man. Great to have you along. Yeah, awesome. Glad you like the content. Yeah, I've had a lot of people supporting me for. We're coming up on 1 year actually. I should do something. I do something for the anniversary. 1 year, one solid year of making content. I haven't missed a trading day since I think June 26th, the first day I published anything. Oh yeah, I remember that. Didn't that have like Carmen Electra in it? Was that from Scary Movie 3 or was that Scary Movie 4? Which is the one with Carmen Electra? That's the one I wanted to see when I was like 12. Yeah. Mung beans and rice. Yeah, man. We got to get this. If we don't get this. Oh, cheers, Gamma Chad. Good to see you, man. Glad you dropped in. Oh yeah, enjoy that meeting. Is it team building? Is there a committee you have to address? Don't you love addressing the committee? I love it when committees think as a group. That's great. They do such a good job as a thinking group. Love them. Curious to hear my take on this week and what I thought of the GME DDS. Yeah, that's right. We can walk through some of that. Hey, Sam. Yeah, that was just on June 5th, right? It was. I mean, it was certainly very interesting, right? Interesting to see how boring it turned out to be, right? I mean, if we can go take a look at our chart for a little bit first. Blow this guy up. What I have to do, like shift 7? Yeah, there we go. So one thing I noticed here, right? This looks like, I mean, in a much smaller, in a much smaller fashion, looks like this, right? So look at this, right? Look at like after this whole May event, look at this insane volatility, and then look at this, right? On Wednesday, the 22nd of May, the high was 22.25 and the low was 20.76. And we closed at 21.12. That was like a week after we did this thing. Thursday, big bearish day. Friday, we had a low of 1770. And then come back the next week, picked up quite a bit. Nobody knows what's going on. I remember, I think this is around where I first like started YOLOing on GME. It was like right in here, right? Because like this happened, and like I saw this happening. I think I like caught the run like right here, and then like exited up this way, and then re-entered like right around here, and then did some stuff in this jazz. But yeah, I mean, it could look something like this. It could be something like this, right? But we do have this, like, you know, it's characteristic of big volatility, right? It looks so small, though. Like when you really zoom out, it really just looks like nothing, right? But we got these, right? We can see that pattern. So these are back, right? We got one in March. There we go. But now we have this nice, like, bullish undercurrent, right? Not too bad. I guess, right, so the big question, I think I mentioned in the video today too, like what I wanted to think about, right, was going forward, right, into these next couple weeks, what this is going to look like. bring up, let me bring up this chart again from today's video. Yeah, I brought up this like calendar deal here. So, I mean, this, like I said, this could be off. This could be off by a day. Again, this is based on the same formula from the Brno paper, right? The Mendel University paper that Richard bases his formula on for anticipating ETF FTD settlement. Yeah, as well as which we've talked about. We talked about this last week as well. So some of these colored blocks, I will say, right, so we could shift these forward by a day. It depends on whether T+1 is a separate day, if you count it inclusively or exclusively. If we count it exclusively, then the 10th is really the final day here, and then everything needs to be extended by an extra day. So that would put so we have basically these kind of two waves of FTD stuff. So this orange box, right, this was VT, this is done, right? So if VT needed to be covered, that got covered this week. In fact, it would make sense to me if that is what we were looking at basically earlier in the week. So let's pop back over to our GME chart. Not that though. So let me say this, right? Because we did get 2 days of some decent bullish volume, and we did get some of these interesting runs here. So yeah, Wednesday had a nice sort of intraday move, and then off the open too, we had a nice intraday move yesterday. Not ideal, not what many of us I think were potentially looking for this week as far as, where they're going to start closing this stuff. I guess in terms of our calendar, we do have a couple more days for these XRT ones. So the IWM fails, right? They might not come into play. They may come into play. They might not come into play, right? So IWM does not currently hold GME, but it did formerly hold GME. So it is possible that there were fails somehow, while it was still in the fund that were internalized, that have yet to be cleared, right? If they are knocked around or something like that, it could still play into this whole settlement charade. But the real ones, of course, obviously, that we always pay attention to are XRT. So that's going to be the purple boxes here. So this would be the fails going back to the 15th and the 17th. So 15th and the 17th would put us, we can count these out too, just so if you guys want to try to count these out yourself. So let's bring up calendar. Okay. So if we have 15th, right? So 15th is going to be T plus, let's see. So we do our T plus 1, 2, 18th market holiday, 3, 4, 5, 6, and then we start counting weeks. So there's T, then we've got 7 calendar days. So that's going to take us to the 2nd of May, 14, 21, 28, 35. May 30th is that. So then these have to be delivered on the next trading day or creation order, right? So institution that failed to deliver the ETF shares has to settle them by T+1. So that is going to be Monday, June 2nd. That was earlier this week. However, then there are 4 days for the creation order to be processed. So that would be 3, 4, 5, 6. So, right, ideally that first batch of fails should have been closed out this week. So that would have been from April 15th, right? Because we didn't have, Memorial Day was a day off. No, so those would be closed on Monday, the 9th. Last day to see those closed out is the 9th, right? Yeah, because I forgot to exclude Memorial Day. No, I don't need to exclude Memorial Day because that is a calendar day, so that's fine. Yeah, so those should have been, by this formula, Ideally, those should have been closed out this week, and maybe they were, right? Maybe some of those were. Maybe they were closed out a bit more subtly. Maybe they weren't. Maybe there was, some more shenanigans going on with GMEU, as we talked about earlier, right? GMEU cost to borrow very, very, very high, highest we've seen thus far. Came down a little bit. Certainly came down a bit today, a little bit from this high earlier in the week. So it's possible, right? But that second batch, I should say, of XRT fails, that is not going to be due basically, until next week. So let's see, let's count these out as well. So this would be OPEX tailwind, right? So this would be everything going into, this might have to do with pan system-wide fails or something like that. But this would be, right, so these fail would go on 17. Here's 5. 6 would be here. So then we're going to count 5 weeks from the 29, 35 calendar days. So 29, we're going to go to 6. So there's 1, 2, 3, 4, 5. And then T+1 delivery should have been on the 4th. And then there's 4 days. So 1, 2, 3, 4. And if those IWM fails do come into play, not sure they will, but if they do, then they would be due either on the 9th or the 10th. So those are still coming up. Of course, the question is, do we actually see that? I don't know, right? Part of this is living and approaching this with a spirit of adventure and discovery, right? Trying to figure this out, trying to model this, trying to understand what works, what doesn't. Do they have to play by their own rules? Are there sufficient, extra safety valves that have been built into this such that this pattern that, if you go back and look at it, it looks pretty solid. Is that over now? Is that no longer the case now going forward, right? I imagine these institutions are trying to change up their approach all the time. So we'll see. We will see. But in any case, I wouldn't be surprised if today we ended up, I wouldn't be surprised if we ended up like having a lot of FTDs today. It wouldn't surprise me. Wouldn't surprise me. Let's take a look at the chat. They could do that. Yeah, they could do that, right? I mean, personally, right? I definitely, when I didn't see some of this come up towards the end of the week, I de-risked a little bit, reconfigured, repositioned. Always gotta do it. I never I did open some shorter term options positions going into this week, right? So I did bet on that. Thought we had a decent chance to see some of this based on investigating this formula. But another good way to really care about the formula is actually investing in it, right? So let's see. Let's get that evidence. Let's put some money in the line so I pay close attention to it. De-risked a little bit. Definitely don't like holding anything. With IV being what it is, and knowing that most likely we've got an IV background effect in place. We could easily see an IV crush coming out of earnings, even if they're good, right? So in fact, December earnings was really good. Let's bump back over to our chart here. This was the case. Not knock it out of the park good, but good. And we didn't get the ATM offering, right? So this was here. So right. So the week prior to earnings, I wonder if Ryan Cohen was trying to get maybe get Roaring Kitty's attention here. Because right before earnings, Roaring Kitty came in, did this drop this tweet here. Yeah, it really looked like it caused a bunch of fair number of these shorts to exit their positions going into this, right? Dropping the time you cover meme. And then we got shorted down off of this into earnings. Then earnings were good, and we did come up out of earnings, but like we didn't blast off, right? We stayed down for a couple days. So I think where we go back up, we went back up into the 30s, then we came back down. I remember going into this and selling selling 30 weeklies going into this, and so we came down, and even though earnings were good, I think I sold them like here. The next day, on the other side of this, I think we opened pretty close to this lower range here, and so they got IV crushed. That did happen. That was something that basically all of last year when I was betting on earnings plays, quarter 2 and quarter 3, weekly, like whatever call was at the, if it was a weekly at the call wall, like that thing got smacked. As long as you paid attention to what happened at earnings, if you're like, oh, earnings was good, in a few days we're probably going up, right? As long as you didn't try to like go too far out, like it didn't work out. In the sense that the contract lost all its value. So I think too, essentially that also happened here, right? We had a day of crazy volatility, and then I mean, whatever you sold, even if you were down for like a day, in here, right? Even if you were down for like a day, like you were instantly fine if you went short into this. So basically, I'm trying to think. Yeah, selling vol into earnings works. Like that really works. As long as I think you don't enter too early. What about here? December. Yeah, I think this probably would have worked too. Yep, it would have. Yeah, so I mean, I hate to go out there and say like, you can't miss by selling vol into earnings. I am kind of tempted to say that. Really recently, that's worked out. Going long vol into earnings, not so much. We do sometimes, so a couple times we've gotten that kind of pop out. So usually it's been annual. Past couple years, past couple years it's been annual earnings. Quarter 4 is basically a time when you could have gone long vol and that would have worked for you for like a day. So this year that would have worked for you for a day. Last year I think it would have worked for you for like 2 days. You could have, interestingly, December this year, you could have gone short vol into earnings on the weekly time scale. But if you went long vol on the monthly, then you were fine. But very, very interesting to consider that. I would say just going off of how it seems that institutions like to go ahead and and play this like, being shortfall into earnings is the safer bet, I suppose. But watch me say that now on the live stream, and then Ryan Cohen is just like, surprise, we bought a bunch of solid gold socks, and then it explodes. I don't know. Yeah. Let's take a look at the chat. Oh, so many. This is great. Interesting. Like, what do you mean by way of barriers? What do you mean by barriers? Like, do you mean like price barriers, like barriers in our price action. Oh man, that's awesome. Yeah, those are the good old days, man. The Reddit days. That was great. I love Super Stonk. I love writing for Super Stonk. I was very sad when I got banned. I mean, not by Super Stonk. Super Stonk did not ban me. Reddit banned me. But yeah, I miss all those folks over there. Hope everybody's doing well. I also don't know. Like, I think part of the reason I miss a bunch of folks on Super Stonk is like everybody's name on X or YouTube or whatever is like different than their Reddit name. So like I don't, and people don't put like their actual faces. So like a lot of the time I don't know what people look like. So somebody comes over and is like, I used to watch you on Reddit. I'm like, oh, that's great. Like, who are you? Yeah. Yeah. Important to prep. We might have that 2-month down. I know Richard's been talking about that. I mean, you gotta prep for it. But the question is like how, I mean, I don't know. How far down do we go though? Is it a question of, we go all the way back down here to 21? I think probably not, right? Like I think if we come down, see, this is the thing here. We came down before. This did dip a little bit below the cash floor back here. But like not that much, right? Pre-market, yes, but not intraday. And then we really didn't slip beyond this 1930, right? So this was 2x nav floor. Then we didn't go below 2030. That was 2x nav floor. Same thing. We came back, didn't go below 20 upper 20s, I suppose. During market hours, yeah, I think. Wait. Pre-market, we definitely went to 2073, I think was our low. So reflecting the new cash balance from earnings here. But it's going to be weird, I guess, how they price. So they have to price the Bitcoin now, right? They are pricing the Bitcoin. In fact, I think like almost all, if not all of our actual movement today was just like fluctuations in the price of Bitcoin. That's what that seemed like to me. So interesting how they price that. Interesting how they price the bonds, because like technically it's debt. Like it's not cash that they own. Like the cash from that is not that they have. I don't know how they're going to price that. I'm sure there's some formula for doing that efficiently, but so I guess like we can't 100% treat it as the convertible bond debt. We can't treat that as pure cash. Although I suppose you can just factor in you can estimate, right? Which is what we did before, right? We estimated what the 2x NAV floor would be if all of the bonds converted to shares, right? Yeah. So that would be back around let's take a look. I mean, that just be kind of back down here, right? So what I would say is probably the lower estimate, a very conservative estimate where none of the bonds or like Bitcoin or anything is priced in. That's right here at the 200. If we do price in, Bitcoin appreciation, let's say they, Cohen bought it like 85 or something, then we should be right around where the 100-day is right here. So, I mean, we should be in here. This would suggest, right? Do I have like a little draw thing here? Paintbrush. Can I just, oh yeah, how about that? Get away. That would suggest maybe, right? We do something like this. I don't know, then up into earnings, then back down, right? Then flat, then we go back. Whoa, we go back. Something like that, right? If we do this again, I don't know, do we just keep doing this? Chewy is. I know some people were throwing out Chewy there, right? Chewy's doing something like that. Oops. Why can't we do this? Right? Can we just do this? This looks cool. Just you can trade it if you want, but also it just goes up and to the right. This is Chewy. Look at how beautifully cyclical this is. Sometimes I wonder, right? I do wonder. I know, last week we kind of talked about the U thesis a little bit. I kind of do wonder to a certain extent, did Roaring Kitty really stop trading Chewy after he sold his shares? Did he really do that? I mean, I guess he filed that 13G, right? But I don't know. At this point, if this dude really has $500 million, does he even care, right? Because it's not. I don't even know if it's his objective. Because that's the kind of guy at this point where after he's made enough money for his whole thing, all the work that he's put into this, it strikes me. It strikes me that Roaring Kitty, that Keith Gill is a guy who's doing this for the purposes of market reform. In fact, I think that's what the bandana is from, right? I think the bandana is a sign of, right? It's from an obscure Occupy Wall Street video, some guy in a video from Occupy Wall Street back in 2011 was wearing something like that. So I think he's trying to his whole charades are trying to call attention to the ways in which the markets are corrupt, right? So he's okay, nobody's going to take the actual serious thing, right? Nobody's going to take Occupy Wall Street seriously. You're not going to do it through the SEC. You're not going to do it through all this stuff. So I'm just going to go and make all of the suits just look ridiculous by wearing ridiculous costumes and, just making $1 billion out of nowhere and then just posting memes, just meme lording all over the place. And then just being all your game are now ours now, or something like that. That really strikes me as what he's doing. And he seems to be having some success with it. So at this point, sometimes I wonder if he's pointing this stuff out to us, hey guys, Chewy's really good. You should do some due diligence on it. You could put your money into this, some money into this, or try to trade this or something, and then just pile the profits into, GameStop or whatever, if you're still interested in doing that. But, I think to him, with this much money at this point, it's not necessarily his objective to make as much money as possible, so much as to make a lot of money and then be able to use it to essentially threaten institutions, right? Because that's what he was able to do, and that's what he has done these past couple times he's been on the scene. Is he's just shown up out of nowhere, dumped a bunch of memes, and then almost blew up a bunch of, or did the first time, right? Did blow up a bunch of financial institutions. So way to go. Let's get back to the comments for a little bit. Cheers, aka Jesse, aka Chewy. Yeah. Cheers, man. Thank you. Do I think he will be active this weekend on his birthday? Just curious on my tingles. Yeah, my tingles. I don't know, man. It kind of feels like something's brewing there with the unfollowing, right? So with Roaring Kitty unfollowing GameStop and Ryan Cohen now, or not Ryan Cohen, Buck the Bunny unfollowing Greg. Is something going on there, right? Is something going on behind the scenes? First, then the the stuff. One thing I will say that is great about Super Stonk, even if it can be a little difficult to get actual, DD stuff sometimes, especially not on the front page. I mean, it's in there, but you got to dig. People will find all of the tinfoily stuff so quickly. Like they're so hyper attuned to be like, there has to be something hidden in this image. And then that's correct. So I wonder to what extent something is going on there that they're trying to potentially communicate with one another. If not, I mean, what could this mean? Could it potentially mean that Roaring Kitty is he done with GameStop? Like that seems like something of a Kansas City shuffle there, right? Maybe right. That's the other thing too. Maybe this stuff about like, oh, he's gonna go trade Unity. He's doing Chewy. He's gonna go trade Unity. He's not following GameStop anymore. He doesn't care about GameStop anymore. Maybe right, like maybe he's playing this like really, really long Kansas City shuffle thing where he's trying to put out stuff that plausibly seems like it's about other tickers, that he's not interested in GameStop anymore or something like that, only to potentially pop up out of nowhere at some point and be like, surprise. So does that mean he'll do something this weekend? That would be cool if he did. I don't know. Something's going on, though. I'll say something's going on there. But it has not yet come to fruition. Another reference. Oh, nice. Nice, man. Way to go, dude. You sound ready to go come heck or high water, right? What's up, man? Yeah, they crushed that, man. They crushed IV heading into the end of this week. It's still, look, I will say this. It's still very high for compared to what we see on like our down cycles, right? It's still very high. Let's see what we can. Yeah, it's like it's still in the hundreds, I think, for like every week in June. June 27th is actually a little lower. Next week, show me 115, OPEX 105, June 27th, 95. So still pretty highly priced. July OPEX is still pretty high at 90. So, and then weirdly, oh, hey, they just added June 2026. Oh, these were active today. That's pretty cool. And IV was high. Oh, what were they doing here, man? And it only goes up to 60. How about that? No 125s for June 2026. These get some volume today? They sure did. Somebody did something. Let's go over to unusual whales. To the whales! The whales! See if we can pull up this chain. Yeah, here we go. There it is. Here it is. So not a ton of trades, but we did get some. Oh, did these go up yesterday? When did these go up? Did I just not notice this? Guess not. These apparently went up midweek, so on the 3rd. Somebody bought these. Wow. all at the ask in here, basically. Very skewed towards the ask. Interesting. These are $25 calls. Break even is like 36 and change on these. Well, all power to you. Very interesting. Some 30s. Got a little bit of action on these 30s here. All today. These were at the mid, so don't really know. Break-even price 39 in a year. Yeah, I could see that. Doesn't seem implausible. Some puts too. Are these short? They were. Not bad. Not bad. But interesting to see IV that high on these puppies. Yeah. Yeah, but it's gone. I mean, not gone. It's just it dropped a little bit. What's up, Ken? See, that's the thing. It's not that low. I know it looks low compared to what we saw, about a week ago, but it's not that low. 90, let's see. Schwab IV composite right now is 93. That's not that low. I know it feels that way. It is low for a number of weeks. So if we look out, right, and you can see how this is priced in, like it's still kind of up there for some of these later ones, right? August is 85. That's not bad. Jan 2026 is low. October is low at around 80. But these are not crazy. If we were seeing 60s, I'd be like, what is going on? But like, 115 for next week, that's not low. 105 for June OPEX, that's not low. This is very appropriate. They're gonna sell something. They got vol to sell, man. And see, even if we do move up, I don't know. I don't see them like being like, surprise, we closed at $42. Like, I don't think they're gonna do that. Like, we could go to $42, but I don't think they're gonna have us close there. Look, they did the thing again, right? They gave us that weekly close at 33, and then what did we close at last week? $29.80. Sure did. We sure did. We sure did. Could be. I have a hard time thinking we're not going to get some volatility next week or coming out of earnings. But again, it might end up looking like this, and we just kind of go to like 32 and then come down. Might get, a little something in August. We do have a bunch of stuff expiring. We have a huge basket of swaps. I'm actually going to be trying to look through this, understand this a bit more. Huge basket of swaps expiring on 31st of July. So don't know what they're going to do with that, but that might be important. That's a good way to put it, Randomscape. GME does nothing or everything all at once. That's the ETF game, man. That's the point. Because if it does, if you can get it right, this is sort of when we were talking about like the variations in Volga. Like GME not only has a pretty big swing in its IV, but also it goes through high and low Volga periods. So it has the rate of change of IV changes quite a lot. So part of that is then, when you can get low IV and a low rate of change of IV, and then flip into a high IV and high rate of change IV environment, like that's when you can that's when you can really go nuts with buying and selling volatility. Probably will, dude. I'm just saying. Brian's having a good time out here. Way to go, Brian. Deeputsur. Earnings shareholder meeting next week. Main story will focus on one store putting staples through two switch. Yeah. That was a fun meme, though. At least staplers have been confiscated. I forget who I was talking to about this, but I was talking to somebody about this earlier in the week. I was like, watch, Switch 2's coming out this week. They're going to, maybe I even said this on the video. I don't even remember. But I was like, Switch 2's coming out this week. They're going to drop a news report that's going to be like, GameStop's really volatile because of Switch. Because of Switch 2, GameStop's really volatile. We're going to see it. The wild thing was that we got the news report, but then GameStop wasn't volatile. That was really funny. Right? We got that like late in the day yesterday. They're like, GameStop shares are experiencing volatility because everybody's excited about Switch. And then nothing happened. So I don't know. Maybe they're just gonna make us wait. Yep. Lines were cool. Lines were very cool. I don't know. We'll see. We'll see. I think Q2 earnings is going to be cool. Q2 is going to be cool because they're going to have all the Switch sales. That's going to be cool. June has historically been a good month for GME. I wonder if they're trying to keep hype low until after earnings and let the stock run next week. They could, man. They could. They could make it look like Q3 again. They certainly could. I mean, this little peak that we had here, this could just end up being kind of a fluky thing that they blame on Bitcoin. And I mean, hey, it worked, man. Look at the 2 weeks after this, right? Look at this. They sent this thing up to 37.5 and closed it below 30 that week. They killed on options. Think about all the 30. Man, you had that one credit. You had that one call debit spread guy going long, putting like $7 million on $36 calls. Those were worthless by a lot. They knew what they were doing. And this is the thing. It's like you're never going to be able to have the it's always going to come down to like, oh, no way they leave this up here. Like they're going to rug it. Like you kind of have to have, and that's not based on knowledge, right? That's kind of like a cynical intuition about what they'll do to the price of the stock. And then they just let it, this is the thing that gets you, right? This is the thing about this week. It's like you can look at the formula, you can look at what's going on, just like back here, and then it comes down and it's just like plop, and then it just sits, and then nothing, right? Like here, this is what they do, right? So they way ramp it up, and so this is like we get this rock back. So way ramp it up, and then smack it here. IV comes down, send it up again, bring it back down. It does this thing again, right? You let IV bleed up, then send it back up toward 30. Okay, now sell a bunch of stuff all in here. and drop it. Okay, and now we come back up. We do a little bounce. We cover the OPEX tailwind. Oh, we know we're going to go into earnings here 2 weeks before, so drop it. Buy calls. Up we go. Drop it again. Bring it up. IV crush. Flatten. Know this thing is going to come in. Actually, this took people by surprise. I think a lot of this had to do with the interest rate adjustment, right? And then we got an October that was just IV killer. The entire purpose of the month of October was to get IV as low as possible, and they did. It was 52-week low right here. In fact, I think when Ryan Cohen posted YOLO and deleted it, so that would have been, that was the 25th. That was either on the evening of the 24th or the 25th. Yeah, that was IV. That was IV low. I think maybe the true IV low was like the 23rd or something, but very, very low right there. And then chunk. Walk us down, bring us back, new high. Maybe we get another double top thing here. Maybe we don't do this exactly. I mean, I don't know. Maybe it does. Maybe it just ends up looking like Chewy. Sometimes I wonder, like, are we just like lagging Chewy here? Because if we get another one of these things here, you know? Right. Could we be? If we do that. I feel like we could. You guys want to do, like, we could just do that again. That's fine. How low will that take? That, you know, go back to 25. Scoop up some premium. Just be premium cookie monsters. Cookie love premium. and then just go back again, right? And then let's go to 40, and then we'll come back, and then we'll, you know, we'll just keep doing it. That'd be tight. Oh, what was my favorite game franchise? Oh, that's a good question. I guess this is GameStop, right? What did I like to play? As a whole franchise, I really liked Mass Effect. Mass Effect was super fun. I like that as an RPG. I liked. I loved Elder Scrolls. I played a lot of Elder Scrolls. Morrowind was my jam. Really liked Morrowind. Really liked Oblivion. Skyrim was okay, but I've never like, I've wanted to go back, and I've revisited playing probably my most replayed one is Morrowind. Oblivion is a close second to that. Skyrim I never replayed. Skyrim, it's like once you do it once through, like you don't really need to do it again. Because there's no because you can become good at everything, right? In Skyrim, you can become good at everything. So it like you just be good at everything the one time, and there's nothing else for you to do. I'm trying to think what else. Fallout was fun. Fallout 3, Fallout New Vegas. I liked I put a lot of hours into like lots of map games too. So I love Total War, like the historical ones, and anything about Paradox. Loved Europa Universalis, Crusader Kings, Hearts of Iron, Victoria, Stellaris. Anything by Paradox was good. June 19th is a market holiday. June 16th is a Monday. It's possible the XRT fails from the 15th were settled via IWM shares or the like. XRT DOD come off ratio 5 days separate. Could they have been settled via IWM? I don't know. How would they have done that? Like, I don't know how that would work. Like, you fail. What would you do? So, like, you're an institution. You want to fail GameStop. You redeem XRT. Like, you borrow XRT. Like, okay, wait. You redeem XRT to create GameStop. You take GameStop. You clear fails on GameStop with the GameStop from XRT. But then you have other fail. I'm not sure how that would work. Doesn't mean it can't happen. I just can't. My thinker's not thinking right now. Oh, cool. Cole says, I've been growing my hair out like RK, and it's been the same length as his along the journey from 2020 to his last stream last year, not cutting it until there is evidence that he has. Very cool. Is Richard doing the same thing? I wonder if he is. That's very cool. When I first saw this random skate, I thought it was me. I was like, I don't have a wig. I got a bald spot, but no wig. Bought the deep out of the money 125 at the close today, and we'll close them out right before the close Tuesday. And then we'll sell max covered calls on my account. Okay. Do it. I mean, not financial advice. This year we did, but then it dumped immediately. March 2025 we did. Maxie, what's up? Hey. Hey, what's up, avocados? Gold socks, man. They're going to do it. They're going to do it. Ryan Cohen, he's going to bust them out. The company is profitable. Also, we bought a bunch of gold socks as a treasury reserve asset. Yeah. So that's a pure IV play. If IV goes crazy on Monday, then, I mean, they're probably going to, honestly, like, it might be too tough. What was the price of these going into the close today? Bump for June 20th. You do have some time. Not much. 13, 14 cents. Yeah, in the first hour of the day, they're probably going to get shellacked if we don't move immediately. Like, they'll lose, maybe not that much. They'll probably lose like 10, 20% of their value, like, right away. I don't know. It's weird because, like, the particular IV on that contract, like, that contract's IV stays very, very high for a very long time, like, so that it has some tradable value. Like, even into the week that it's expiring. So if IV moves, like, if we really start moving to the upside, like, it might work, but it's very difficult. Like, if it doesn't do what you want it to do on the day you want it to do that, you're done. Like, it's a very tough contract to trade. Okay, here we go. Oh, wow, I'm so behind on the comments then. Barriers is in low liquidity phases. I don't. Well, so the thing is, like, the question here, and this is one thing that I was thinking about, and then I was also like discussing with Richard earlier, where it was like, if this is correct, right? If we had the whole settlement model correct, then Roaring Kitty and Ryan Cohen both definitely have it correct. Like, they both definitely have it correct. And if they both definitely have it correct, at least one of them is making a lot of money off of it. Also, somehow, Ryan Cohen regularly only buys deep dips. He buys massive lows, right? So he sniped the bottom on, he bought here. He bought here. Like, he knew it would go here, right? He knew it would go here. And now he's up 75%. At least 50, I guess, right at the close. He's up like 50, almost 50% on the shares he just bought. So if the ETF settlement formula, like, if that model is as we think it is, then he definitely knows it. He definitely understands it. And Roaring Kitty definitely understands it. And if that's the case, then the question becomes, okay, on the one hand, how are institutions going to try to pivot what they're doing to account for that? Because they might then know that they know that they know that they know. But if that's the case, it's like, do you want to disrupt that, right? So, like, what I suspect is that Roaring Kitty watched whatever was happening. Like, he studied this for several years. He was like, okay, what are these guys going to do? How are they? Like, he probably looked through the swaps. He probably saw what they were doing with the swaps back here. He understood what was going on, like, with ARP cycles, etc. He understood how this would work. And then for 3 years, he just watched them, like, do the same stuff, right? He watched them with the swaps, and he watched them with the ETF trades, and he just watched them do it until he watched them go to do it again, as they would, bump it up and then knock it back down, keep going for another year to $7. And then he did his whole thing here, and it messed with the algorithms and priced us up to $80. I think, too, it's also very likely that, and this is one thing actually that otherwise Category 42 pointed out, which I think is very plausible. I think that it's possible or probable that Roaring Kitty was going to exercise his calls live on his stream. Because if we go by the formula, the model of how this should have played out, the peak of this actually should have gone like, it should not have come down yet, right? Like, it super shot up on the 6th into the 7th, right? The morning of the 7th, I think, is when it pre-market is when it went back to like $65, right? So he could have, I mean, really, maybe sent that up considerably back to the upside there, right? He could have, with the price in the 60s, if we opened at like 60 something, rather than come down with the ATM. Maybe it could have gone higher. Maybe we would have gone back to 120 or something like that. I don't know. Now, what I don't think is, I think that Ryan Cohen correctly understood that what his opportunity was to go ahead and do this ATM. He just decided to do it on that Friday, say, rather than wait till Monday and maybe risk missing that opportunity to offer shares at 40 something or 30 something dollars a share. But in any case, I'm not sure that the company would want to disrupt that cyclical action. Maybe, right? Maybe just send it into the stratosphere with with a bunch of Bitcoin purchases. But I guess the question is how desperate is the machine? Would the machine then turn around and all of a sudden just start trying to attack Bitcoin or something? I don't know. I don't know. Oh, so many. This is great. There we go. A lot of long volatility moves came at close. He shorted shares and bought. Yeah, I saw that. I saw that. I think he pointed that out. Yeah, here. Right. Was it the 30s? Oh, no, 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 no. It was for the 13th. It was for next week. Right. Wait, or was it for June OPEX? Am I going crazy here? Oh, I know. I've got it set to 7 days. Yeah, there we go. June OPEX. Yeah, I saw this come in. A couple thousand contracts. Not crazy big, but, not nothing. Yeah, and it got picked up as, well, these are interesting. Just not a lot there. Yeah, we'll see. We will see. We'll have to see what they do. Simple, come home to Simple Rick. Remember a time when GameStop was only $16 a share and Roaring Kitty hadn't been heard of for 3 years? We took the sweet delight of sending the short hedge funds to hell and put it into a delicious sweetened wafer cookie. Come home to $17.41. Come home to Simple Rick. How are you, Simple Rick? Interesting name. I guess he could have. I don't know, man. I think so. Tits pattern is the sign. Yeah, he might. Why not, right? But like he probably have to do it differently, right? Like he's not wasting his time with I mean, I guess you don't like I guess that's part of why you like looks for like 50 baggers or something like that, right? Like he said back in his old streams. Because you can if you can identify that stuff and put, I don't know, put $1 million on a 50 bagger or something like that. It's not very conspicuous. Gives you good return. Yeah, I don't know. Does he have? He definitely could. That'd be something if he did. Because if that were all him, man, like just this week we saw like 70 million in premium for those exchanged. So he'd have a lot of cash. He'd have a lot in his account, let me tell you that, collecting interest. He just he'd just have like he would essentially have shares. He'd have, I don't know, hundreds of millions of dollars in his account collecting interest, right? So he'd be collecting, I don't know, if he's got now up to like 200 million in cash in his account from these trades. He's collecting 4% on that, or I guess it's 5%. SOFR is up at 5%. So, but he's working through his broker, so he's probably getting somewhere in the fours. But let's say 4%. He's collecting 8 million in interest on leveraged GME short puts, just holding that cash in his brokerage account. Very interesting. Yeah. And then, of course, he'll profit, right? He'll profit if GME goes up. That'd be cool if that's what he was doing this time around. Yeah, I've been looking for that too, man. If somebody has the red headband, I do remember, yeah, there are the red armbands. That would be cool. Feels risky. Sharon says feels risky to sell into earnings. Well, I suppose it's what sort of risk? If you sell covered calls into earnings, pick a strike where you're going to profit, right? Don't sell something where you're going to get assigned for a value that's not going to match what you paid for your shares. But once again, we had another high volatility moment that sure enough came back to earth. So that's a question. It's a question of offsetting risk. I would say that timing these volatility currents really, really well is very difficult. I would say the more recent ones got harder too. I felt like this was a lot easier in the fall. I'll level with you guys. It was easier in the fall. It has not been. I would not say winter time was okay. Like February was all right, but again, right? Maybe I just got lucky with some of this. It's been more difficult since, right? So at a certain level, it's like, okay, yes, it could be risky, but then timing the volatility stuff, how do you do that? It could work, but you could miss. The thing about selling covered calls into earnings, you don't have to do your whole position at this point. You could sell a little bit into earnings, even keep some set aside, right? You could target weeklies, right? So that's what I like. I'll tell you guys this, like that's what I did, kind of going into the close today when I was repositioning. So I saw, right, we were going flat. IV was going nowhere. I was like, all right, got some of these shorter term, longer calls. Don't right. Hold these for a couple days. Like I said, if I do this and that was a specific bet, and the specific bet was in the second half of this week, we're going to see some FTD covering. We did not see it. It did not happen. So that was the bet. So take the loss and move on, right? That's not what that trade was structured for. It was not structured to capture profit into next week. Now it may go ahead, right? Something might happen where it goes ahead and ends up being a profitable trade, but that was not the trade that I set up, right? That was not how I envisioned it. And, you can run this through calculators and you can see what'll happen. It's like, okay, if I cut it now, small loss, right? Like 10%, 12%, something like that. Not optimal, but, based on how I scaled it to the position, not bad, right? That's a very small percentage of my portfolio as a whole. So not too bad. Doesn't really mess up, profitability for the month or anything like that. But, if I then say, okay, well, I'm going to hold these into earnings, and then Monday we don't get anything, and Tuesday we don't get anything, And then earnings, we get an IV crush, and now it's Wednesday, and these things are expiring pretty soon. And 5 more days of time just burned off of them. And now IV's down, and now the price is down. Ooh, now we're probably looking at like a 60%, right? And that's not as fun, right? So, that's how I went into this. And so I thought, all right, well, I'll reposition to a certain extent. I'm not going to totally, just, kind of full port cover calls at this point. But yeah, I want to hedge a little bit of downside, take advantage of a little bit of these higher IV conditions. See what happens on Monday and Tuesday. If we start really moving up on Monday and Tuesday, well, great. I'll sell some more. I'll sell some of that vol. But also right now, just targeting the weekly, right? Just targeting the weekly, because I can look out a week and I can say, okay, right, I'd love to do essentially next step up above, right? We've been flirting with 30 a lot, feeling flirty and 30. But right, you can go ahead depending on your risk level, and you can say, okay, what are the odds we're coming back down? What are the odds we get the IV crush? Well, pretty high odds we actually get the IV crush. Even in bullish periods, that weekly contract does not do well, right? Monthly, maybe different, right? Month out, although now we're coming out of we're now heading into the back half of a bull cycle here. So, yeah, so not sure necessarily this is risking something like going bullish into like mid-July or something like that. Maybe we get some in the later June, but so there are ways to balance it, right? You don't have to do everything. You don't have to fully commit to one path or another. You can break it up in a way that will work for you, Sharon. Hey, what's up, Kurt? Oh, we got some tinfoil. Kurt bringing the fastball here. Time Magazine cover tinfoil. 109 equals 69 seconds. 6/9/25. Roaring Kitty live show at 4:20 p.m. That'd be cool. It's on Monday. That Monday? That'd be fun. Not sure, though. Be hard. So I'll put come in today right after 10 seconds after 2 larger bullish calls. Yeah, I don't think the puts are him. Yeah, it's in the hundreds of millions. Yeah, I think I made a couple videos about how they work a little ways back. If they are unhedged, I mean, I actually really like them as a bullish trade on GameStop, right? Because when they were coming in a couple weeks ago, back when we were down in like the 27s and the 28s, I really, really liked them as a trade because they basically hedged their own downside. So if you measured from the point that they were bought, and you measured the potential profit over the course of 7 months from leveraged interest rate, your entire downside down to the 2x NAV floor was hedged by that interest rate income. And then you just had, upside all the way into the hundreds, right? So 115 or 120 or 125 or whatever. So you wouldn't get to sell volatility, but you would, instead of volatility, you would collect interest rate, leveraged interest rate. So I like that. But then I remember I was talking to What Can I Make Today about this as well. It does seem like they're also coming in with a lot of hedging on the part of who's ever writing them. So it does look like whoever is writing these is almost treating them like kind of like a swap, in the sense like how a prime broker would treat a swap. So in the sense that they're shorting these contracts, they're shorting these contracts, and then they're going and shorting shares in order to delta hedge the contracts so that they're delta neutral and they're just exposed to leveraged interest rate income. So that ends up working the way that a prime broker would enter into an equity swap with a counterparty. So the prime broker does not care about the value of the underlying. They want to be hedged completely to the value of they want to be completely delta neutral at all times to the underlying equities. They just want their regular payment, right? They just want their regular payment in interest. That's all they care about. So that then they can leverage it. So they can do that with 50 different parties, and then short 500% of the stock, and then have crazy, awesome leveraged interest rate payments. Yeah. So it's either one of those, but maybe leaning towards the second one of those now, because it seems that when they come in, the price kind of flatlines, which is really interesting. And that's not what should happen. In fact, that didn't look like what was happening earlier, but it seems like that was happening more so this week. It'd be cool. I'd take an ATM. ATM would be great. Get some shares at a discount again. Cole says, kind of think RK is waiting for GME to move higher, and then we'll load the options chain when MMs think they're safe, and then he will exercise hundreds of thousands of options. Could be. Could be. We must wait and see. I like the way you think, Kurt. What are the odds that he's here right now? Keith, if you're out there, man, like, cheers. We're carrying on the live streams in the spirit of you who started them. I don't dress as cool though, if you're here. So cheers to that, I guess, too. Cosmo, what's up? I like the Flintstones reference. Yeah, probably. He probably does. He probably goes out there, sees what we're talking about every once in a while. He checks Super Stonk every day. We know he does that. We know he's on Super Stonk every day. Does he? That's cool. I mean, Arby's curly fries are good. It's the spice. They got that Cajun spice. Yes. Yeah, you see that over on SPY too. Gaps at 5. People do it in 5. It's human psychology thing. They options accumulate in $5 increments. So those end up serving as critical areas. So usually as well, the way that they develop, the way a gamma ramp develops is okay, so we'll see this, right? It'll fill in at individual strikes, but part of it is like buying will continue to occur. So as a strike moves into the money, that stimulates right. So let's say, right, something happens. You have a bunch of options set up where, let's say, you have a couple strikes all stacked on top of each other. So what you saw a lot in the fall, right, is we'd have like $20. There'd be a lot of 20, then 21, and then 22. And so you'd have like this pocket, right, like on September 20th, this like dense cluster of accumulated call gamma exposure where traders are long and the dealer is short. So all of a sudden you get a catalyst. Up we go. We start to move. As we start to move, it's close to the end of the week. Gamma values are very, very high when they're close to the money. And then all of a sudden, those 22s, back when the price was at 19, let's say the 22s there are those gamma values end up appreciating, right? So that delta appreciates very quickly. Suddenly the market maker has to hedge very quickly, and the price starts to shoot up pretty precipitously. Then the options market gets very excited. And what they do, right, buyers will come in and they will fill in strikes. They will fill in the strikes that are above that price action. They'll either buy at the money or out of the money. And so the road upward or the ramp upward essentially gets paved as it's being walked, right? So it gets walked up and it's being paved. And then there's a slight pullback, but then there, more calls come up and then more hedging volume pushes it up. So you have this constant interplay of hedging volume and options volume on the part of traders and institutions that then continue to build out the options environment dynamically so that it keeps going, right? It keeps going. Otherwise, what you have, if you don't have those things sort of balance out, is you'll have hedging, and whenever this thing gets set off, it'll just shoot up until it hits a dead zone, and then when it hits a hedging dead zone, it just goes whoop, and then and then it just fizzles out, right? Something like that. Yeah, I mean, I think that's where the 2x NAV floor thing comes in, right? That's where the 2x net asset value floor hypothesis comes in. Can they send us back to 25? Yeah, they could probably send us back close to there. But back to 20? Wow. Maybe they can, right? I mean, I'm never going to say never. I would just say that why didn't they send us back to 19, right? Why didn't they send us back to 18? Why didn't they send us back to 17? Why is Simple Rick still out here waiting to YOLO at $16, right? Why didn't they send us back? And part of the idea is, pricing, fair value, estimation of the stock says, no, there will be too much buying from the actual buying forces that matter that prevent the stock from going that low. So this is why I say things like, right, there are certain rules that can be violated. There are certain things that can be played with. There are certain mechanics that can be messed with. But when it comes to pulling the wool over another institution or the institutions at large, right, it gets more difficult. Because you're right, every institution actually has some working fair value out there for what GameStop should be priced at minimum, which takes into account things like what the implicit value of owning a share of GameStop is if you can use it as collateral for the options market, right? Things like that. So we can have spikes down, but we've only got about $4 a downside here, $4 or $5 a downside here, I think, not 10. What's up, Guido? Earlier in Richard's video today, he mentioned low volume days GME had starting in late February till about March 17th. Where volume hit a record low and many ETF FTDs. We had low volume today. Yeah, we might have, today might be that kind of day. Let's see, today's early June, so we'll get these ETFs. It's early enough. We should be able to see, wait, do we get them a month back or we get them 2 weeks back? No, we won't get these for another month. Early July, we'll get these. Next week, we get second half of May, I think. Or week after. Yeah. So we'll find out, but not for a while. Hello, Goblin Slayer. That's a cool name, man. Yeah, that's right. We saw the PSA step, Bronson. Yeah, we got to hear about what's going down with Nat. He's going to be added to his term on the board is going to be re-upped. Very curious to see the PSA numbers. Well, yeah, we were so stoked about that going into Q4, and then all the stuff happened, right? All the bond stuff and the volatility and just like PSA are like Pokemon cards. Even Richard stopped talking about Pokemon cards. You notice? 3 months. We were very stoked about PSA going into the quarter 4, and then it was just like convertible bonds, Bitcoin. But secretly in the background, it's PSA. Is a stock run even possible in today's climate? Or has GME evolved sufficiently and settled into more static performance? That would be the dream. Like I said earlier, Cosmo, it would be really cool if we just did the same thing that Chewy's doing now. That would be cool. If we just do that. Oh, yeah, right. Brian Ziolo at the BTC conference. They probably will. You know, like, I mean, I repositioned, but like, you're welcome, everybody. Now the stock can fly. This is in response. I'm so behind on the comments. Is this in response to the Cookie Monster comment? No. Hope and go on the floomy. I remember that. Yeah, no, but Ken, like you speak Danish, so it's gonna sound too much. It's gonna sound too much like an actual Scandinavian language. Like the point is to like not like really sound that close. Hopen, go on the floomy is like that doesn't sound like Swedish. But I don't know. Like you probably, as a Dane, you probably have like a bunch of inside jokes about Swedes and stuff. So you could be like the Danish Swedish chef. Do that. I was definitely talking about the Muppet Show. I don't know about everybody else. I'm so behind. Gran Turismo. Never played. Yeah, I didn't play Gran Turismo. I remember that game, but I didn't play it. Quake. There was a Quake demo that was really cool that I played a lot as a kid because I couldn't buy the game. The Quake demo was fun. You can short puts. If you're bullish, if you're worried, yeah, if you have cash, right, you can short puts. There's also, I mean, you can also do more advanced strategies. I don't do more advanced option stuff, but you can. So you could do like there's advanced stuff where you can short volatility. You can do like there are ways to do it. But you have to use some instrument that's short vol. So either by shorting a put or shorting a call. Because in GameStop, it's different, right? It's different for it's different for GameStop than it is for SPY. So like a put is bearish on the price, but long on vol. But GameStop's volatility goes down when price goes down, typically. So, but you will get that little earnings-induced IV crush. So you could short a put. If you don't want to like get assigned on a covered call, you could short a put. So that'll, let's see. I'm like if they're our puts priced. You have to go a ways out, but well, $30 put for June 20th is like selling for $225. So It's not bad for a couple weeks. Right. 2 weeks from now, at the money short put is giving you like 8-ish%. And if you get assigned, your average cost is 27 something. Yeah, it's like 27.25. Actually, that would have been a cool trade. Dang. That would have been a cool trade. I missed that one. Oh well. Maybe I'll do that on Monday. Can I do that? Yeah. Oh. Okay. I'll get them next time. Not this time. So juicy. Huh, very good, Sharon. He might. I don't know. Why do you think he wouldn't come back because of the ATMs? Interesting thoughts here from Ryan. Still wonder about what legal agreement he may have had to sign after his congressional hearing. Imagine if he was still live streaming and sharing what was going on. That would be cool. I would love to see him again, to have that kind of contact with somebody with that kind of inside knowledge there. Very wonderful. Well, we're very lucky to have you guys, that's for sure. I've talked to Rich about this too, right? Like I'm very similar. I like to talk. I like to say my thoughts out loud, right? So it's very helpful for me to be able to talk to a group of people like that can ask good questions and then be like, "Huh, what about that?" And then when it comes time for me to think through stuff and do some reading and be like, "Oh yeah, what did Ryan Larson say?" That's what I do. I do think that way. It's very helpful. Yeah. Yeah, but these are not guys who are interested. Like Wall Street is not interested in having people play fairly, right? They're happy to have an advantage and use it until somebody else figures out how to undo and unseat that advantage. Yeah, I think he was probably asked to no longer stream. Well, he was either asked by Congress to no longer stream, or he just didn't like the movement was on. He didn't need to do it to keep because at the start, I imagine it was part of how he stirred up the community movement and stuff like that. But after that, like could have been like a desist from Congress, or maybe he just didn't want to give away like what he knew. I think that's it. Because I think initially they were like, what did this guy know? Like they didn't go watch all his streams. He had hours of information, and so much of it was him just like drinking beers and like making jokes and like doing stuff with memes. And then every once in a while, he would just be like, want to know some insider information about how Wall Street works? They'll do this. Oh, hey there, Dion Ho. Thanks, man. Cheers. Light of the Seven. I do like George R. R. Martin's stuff there. I'm not particularly familiar with this tinfoil. Simple Rick's caught up. I know, man. I know. We all do, but we also don't. Oh, nice. YOLOing at 20 is nice. Excellent job. Yeah, well, you've had some time to average down, right? He'll be back. I'm the one that's way off. Yeah, no Scandinavian in me. Oh man, great trades here. CSP set for the net floor in June, October, and then you sell weekly calls. Beautiful. Beautiful. Do I anticipate a co-stream with Gherkin and Richard? Gherkin banned me from his Discord. He did not want to talk to me. I went to his Discord, asked questions for like a week back in January because I was trying to understand what would come next. And I don't know, like, fair enough. I mean, it's his Discord. He doesn't have to entertain questions from me. Maybe it was like super boring, basic questions that were just a waste of his time. But he decided to ban me from his Discord. So I very much doubt that dude will have a co-stream. Will have a co-stream with me anytime soon. Appreciate his research, but he does not like me for some reason. That's fine. He's his own dude. He doesn't have to. But as far as with Richard, a co-stream, yeah, maybe we hop on it together at some point. He likes. I mean, he's got his routine. He's got his rhythm. He has done some co-streams, I think, in the past, but he's in his mode right now. We talk all the time anyway, so maybe towards a little bit further on in the saga, we could do a joint AMA or something like that. But that's down the road. That's down the road. But probably not with Girk. But probably not with Girk. Yeah, that's right. That's right. There's some. I've seen some. Like, people do see him in public. But he lives like outside of Boston. Like, he lives in a suburb outside of Boston. Like, it'd have to be the grocery store. Like, I don't know. I don't know if he travels that much. Yeah. Yeah, Richard's happy just to make it an online video diary, but he does not want to become extremely popular. Understandably. I even do this, and it's like there's a lot. You just gotta, because you gotta be on it. You gotta be on it all the time. It's a lot. Got you, Pro Styles. I got here. I'm not gonna leave you hanging. Do you think they'll do more convertible notes, continue to invest about 30% into Bitcoin? Good way for institutions to increase their exposure to Bitcoin and exit swaps. They could. I hope they do. I hope they do more. Part of the idea, though, is Ryan's good at keeping everybody guessing, right? Because the idea back in March was like, oh, they're definitely going to do another offering. They will definitely. This is amazing. They'll just keep raising money, but now they're going to do this convertible bond thing. This is going to be. But then he's like, oh, are they going to do it? Is he going to do it? When's he going to do the offering? When's he going to do it? When's he going to do it? Is he going to do it? Because like, I guess part of the idea was, oh wow, they just did that thing into the Bitcoin announcement, but then they didn't do an offering. But it went down anyway. And then it was, oh, okay, well then maybe they'll walk it back up again so that he's enticed to do an offering, maybe higher or something like that. But maybe he knows he's going to push it higher so he can do an offering off the top there. I don't know. I don't know. I hope so. I think so. I think that's good for the company. It seems to, it makes the floor keep going up. So I'm super down for the company to keep like raising $1.5 billion. That's fine. Fine by me. Put it in Bitcoin, put it in treasuries. I don't care. Keep getting cash infusions for nothing. Like, okay. I asked a bunch of questions of Greg. I don't know what I'm doing. I just read this shit online, like I talk to people, like this is it, right? I try to read, I try to teach myself. I do some stuff by experience. I make mistakes. I try to get ideas from different places. Part of it is like, you got to read, you got to meet people. I do. I try to I try to talk to people. I try to reach out to people, especially people who know what they're doing. Like, I ask a lot of dumb questions. I asked a lot of dumb questions a year ago. I asked a lot of dumb questions 6 months ago. I asked a lot of dumb questions 3 months ago. I'm pretty sure I'm still asking very dumb questions now. But you know what? I'm here. Like at this stage of things, like being a profitable trader and being this far down, talking about this stuff and trying to figure out like how this all works. That's what you got to do. If you ask 1,000 dumb questions, that's 1,000 ways in which you are no longer dumb, right? But I don't really know what Girk's orientation is right now towards GameStop. I don't know that he, I think he was. I don't know the whole thing behind him and the Super Stonk community, but like he got a lot of flack from a lot of different people from like posting a lot of really awesome stuff. He seems to be very well read, very well learned in these things. He's been doing this for a while. He was at a very advanced stage of this thing, 4 years ago. So like for me to, I guess, come along like in 2024, beginning of 2025 and like ask him questions about stuff that I guess like he figured out for himself, like, 3 years ago or something like that. He just might not, it just might have been that he wasn't interested in doing that again. He was also like very, I would say, and this is not necessarily to speak ill of him, but like he was very cautious. He was very concerned about people, number one, like potentially coming into his Discord to advertise stuff or to promote themselves. He was concerned with people trying to steal and like repackage his ideas and research. I mean, I wasn't interested in those things. That's not right. I mean, for all the times I mentioned him, if I was trying to steal something, there's nothing for me to steal, right? Like it's there, and I point this out, and I'm happy to give him credit for this, right? I'm like happy to admit that I do not know what I'm talking about. Everything I've learned from people who have been able to put this stuff together. But it sort of gave me the impression that other people had done that maybe, or like tried to mess with his Discord, from his GameStop channel or something like that. He didn't like, he would joke about like getting rid of the GameStop section of his Discord. But in any case, I just don't think for whatever reason, whatever the questions there were that I was asking, or the fact that I was asking about GameStop, or maybe because he had issues with people, trying to mess with his Discord or whatever in the past, he just it just happened out of nowhere. He just decided to ban me. So that's it. And no, I don't think Dirk is a plant. No, 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 no. Like I said, I just he's hey, he can do what he wants. It's his Discord. Um, you know, not I genuinely don't think he's interested in the GameStop avenue anymore. Right, he has a very interesting way of going about his channel. Right, he does like 8 hour live streams every day. That's what he does. Um, which is a lot. But he talks about a lot of different things. He looks at a lot of different equities. He's also designing this platform Gamma Strike, so he's trying to do his own um, like options analysis thing. And I just don't think. I think he also got I think he also got frustrated with GameStop and how it works, right? Um, like he got to the stage of understand, like he published, as far as I can tell, the most cogent um, descriptions of the volatility cycles regarding GameStop, like sooner than anybody else did. Um, he got right to the point with that stuff, and nonetheless, GameStop became, even understanding that GameStop, I imagine, presented a lot of challenges with trying to anticipate exactly how that musical chairs and ETF charade thing was going on. Like like this week, right? A lot of us looking, myself included, right? Hey, we might get some stuff this week if this is how this works, if this is how this cycle works. But so I think he might have just been done with GameStop and just didn't really want to have somebody who was in the channel who was just trying to, dig that up again. That was basically um, that was my orientation, my understanding of how that went. But my strong command of crab cakes. Yeah, from my days in Baltimore. Yeah. Oh yeah. I don't think Arcade needs to go shopping himself anymore. No, that's true. He doesn't have to. But it's fun. Like, get out of the house. I don't know. I don't know. However much money I make, like I'm still gonna go, I'll still go to the store. What's up, JT? AKA Marvin the Martian, except you're on Twitter. So your name is different. He can, but I think he can do it in some I think Arcade can potentially threaten the financial system in limited ways. It's not quite to the level of anything critical, but I think he's still like, I imagine what he'd like to do is become increasingly capable of that. Hey, cheers, man. I really appreciate that. Yeah, I hope that's what I hope with this stuff. I hope others can benefit from some of the some of the pain of my experience with this stuff. That's the dream. If somebody else can hurt less, that works. Cheers, man. Cheers, Cosmo. Cheers to you, my friend. Peace and blessings. I'm waiting. 150. It's coming. Hey, cheers, man. I really appreciate that. I really do. I really hope you guys benefit out there. I think this is a good note to tie us up on today. Thank you so much. Yeah, we'll have to look ahead to what's coming up with earnings. It's gonna be an interesting week. Of course, we'll see if there's an offering. see how we're doing on revenue. We'll find out about the Bitcoin price. We got the breakdown of the annual shareholders meeting, right? Shareholders meetings on Thursday, so we'll have some things to talk about next Friday. Okay? Yeah. All right, guys. Thanks very much. Enjoy the weekend, and yeah, we'll catch you guys. We'll catch you guys next week. We'll see you, folks.